I'm Brenda Bryant. I'm an instructor with UNR Extension. Welcome to an introduction to small business loans, or as we normally say, where is the money? So business loans are about, as you know, qualifying for a small business loan is a big step as a business owner. So you are really starting to put some real effort into your business or expand your business, but now it's time to say, I need a little help, financial help. So you want to evaluate your needs. You know, what is it that you really want to get a loan for? So funders want to know, why are you getting the loan? How much is the loan? How does that loan help your business? Are you expanding? Are you growing? Are you improving operations? So these are things that are part of that conversation that you have with the funder. What are you bringing to the table? That's another question that the funder has for you. If you want my money, what are you bringing to the table to make that possible? Do you have any savings? Do you have retirement that you can put in? Do you have any kind of collateral? Have you talked with your friends or family? Or are you, as some of us are, part of the NFL? No friends or family left. So there are different types of loans, and we want to look at several of them. So let's look basically at what we call a business loan. A business loan is simply no more than a lump sum of money that we get from a lender, and it needs to be repaid. That lump sum of money has an amount to it, and it has a time frame to it, and it has an interest rate to it. So those are the three things you're looking for. The time frame, how many years is it going to take for me to pay it back? How much am I paying? What is the amount of that loan? And what is the interest rate on that loan? Another type of loan, you may have heard there are things called SBA loans. Truthfully, they are SBA guaranteed loans. And the guarantee is from the SBA to the lender that you, as the small business owner, will be able to use this money correctly and to pay it back as per the agreement. If that does not happen, the guarantee from the SBA to the lender is up to 90% of that loan if it goes into default. Please understand that the lender gets his money back, but you are still on the hook. And the third type of getting money from a lender is a line of credit. What is the difference between a business loan and a line of credit? Well, a business loan is a specific amount of money. We know it has a time frame attached to it, and we know it has an interest rate attached to it. When you think of a line of credit, think of your credit card. It's flexible, it's revolving, and it's variable. What that means is if I have a $10,000 line of credit and I use $5,000, I have $5,000 left. If I pay that $5,000 back, it goes back up to I have $10,000 that I can use. So as I take money out and pay it back, it goes back up again. So that's what the revolving line of credit does. You can't do that with a loan. When you take that $5,000 out and you pay it, it just reduced your loan by $5,000. You can't go back and put that money back into it. There is something called invoice financing, or you may have heard the term factoring. That's when your invoices are sold to a third party. You get your money right away, which helps you with cash flow. But the people that you sold to will now be paying that third party. So it's loans against your accounts receivable. There are also equipment loans. Is there some major kind of equipment that you want to purchase for your business. And then there are merchant cash advances. And a merchant cash advance is sort of like factoring, except it's against those credit card sales that you will have coming in, and that money will then go, again, it's for cash flow, and that money then is paid to the third party. So there's different kinds of what we call SBA loans, even though we know it's SBA guaranteed loans. So there's 7A loans, there are 504 loans, there are micro loans, there are disaster loans, which probably the one that we know the most about right now after having gone through COVID, and there are express loans. So in a 7A loan, that's probably the one that you hear about the most. That's the most popular. And it's used for working capital. It's used for expansion. It's used to getting the business either up and running or moving forward as it expands. The loan amount is up to $5 million. The terms will be based on what you're using it for. So if you're using it for real estate, it's going to be up to 25 years. If you're using it for other purposes, it's going to be up to 10 years. And the interest rate is usually based on the prime rate plus whatever the margin is that the bank has put on it. 504 loan, you may have heard about that one. That one is more for real estate, more buying. I'm buying a building for my business to be in. And that's designed for like big purchases like a building or like big pieces of equipment. The loan amount for that is up to $5.5 million, but you have some flexibility in your terms based on what the contract is that you signed. So it can either be up to 10 years, 20 years, or 25 years. It is a fixed rate interest, but that is determined by what the market is doing. And what is an express loan? Well, it's a faster loan. It's an expedited loan. It's one that you can give, excuse me, it's one that you can get faster approval for. And the amounts are a little smaller, okay? This one is not in the millions. This is up to 500,000. Terms for this is up to 7 years, and this could be a revolving loan. Again, depending on what the terms are that you come to with the lender. The interest rates are going to be a little higher because we're getting it done a little faster. And a micro loan, you may have heard of micro loans. These are the smaller loans. This one is for working capital also, but maybe you don't need as much working capital, and looking at bringing in inventory or looking at supplies and equipment to get the business started. The loan amount is up to $50,000 and the terms are up to 6 years. The interest rates are going to be higher and it's going to be smaller amounts. So a disaster loan, and this I said, if we think back to the COVID era, you'll be probably quite vocal and understandable of the disaster loan. This is actually the only SBA direct loan. This one, that I tell clients that SBA doesn't have any money. Well, during the COVID, they had money. And that's how the EIDL loan got started. The purpose of that is designed for major assets, real estate, large equipment purposes, to keep the business going. The amount is up to $2 million. And the terms are up to 30 years, but it is a fixed rate, typically lower, to encourage that building of the business. The benefits of an SBA loan are lower down payments, and because conventional loans have a little bit higher on the payment range. There are also lower repayment terms, so that keeps the monthly payments down a bit. So then that eases your cash flow. So as you are doing this, you will see that you have a better handle on your cash flow. So how do we get prepared to talk to a lender about money that we would like to get from a lender? So we're going to look at 6 different things. We're going to look at credit score. We're going to look at what documents a lender is going to want from us. We're going to look at what do they want from our business plan. What kind of repayment are we looking at in giving them their money back? How are we going to know which lender to go to? How are we going to research those lenders? And then what is a cosigner or a guarantee? So with credit scores, there's a difference between personal and business. After we came out of COVID, the personal score became so much more important because many of us lost our business scores because we were out of business for a while. So the personal score is based on either FICO or Vantage. The scale is about the same between 300 on the low end to 850 on the high end. When you're looking for a loan, you want to be somewhere in the 680 to 700 plus range. And your personal score is attached to your social security number. Your business score is based on a scale that is done through Dun & Bradstreet, and that is from 1 to 100. Your minimum score when you're asking for you're using your business score for your loan is 75, so 75 and up. And this is attached to your EIN, your employer identification number. So what kind of financial documents is a lender asking you for? Well, they want to see your tax returns, personal and business, both, for the past 2 years. They're looking at bank statements, preferably somewhere within the most recent 6 months. They're looking at your financial statements, your profit and loss statements, your balance sheet, and your cash flow. They will probably look at those over a 2-year period if you have them over a 2-year period. And then they're looking at what that summarized business plan is, because of course you already have your business plan put together about how your business is going to work. And so what you want to do is summarize that for the lender, looking at your business model, your market analysis, and your financial projections. So many of the lenders, instead of taking your whole business plan and trying to make it through that, are telling you, here's an application. Fill out the application. Well, what you want to do is you've got your business plan. You want to use the information that's in your business plan and fill out the application the way that they want to see it. So your executive summary for your business plan is nothing more than an overview. By the way, this is the last thing that is written of your business plan, not the first. Why do you want the loan? So the lender needs to know, why do you want this? And can you pay me back? I'll say, so what's your business potential? How are you going to use this money? Okay. And then looking at your market analysis, looking at your industry, looking at your market, looking at your competitors. Have you done those things? And those things should be in your business plan. And you can transfer that information to the application. Also think about your organization. What is your structure? How is your management set up? How is your hierarchy? What are the positions that you will have in your business? When you are looking at your product or service, what do you sell? And so, and you need to, as you're talking to the lender, you need to tell the lender what it is you do. What is the product that you offer? What is the service that you offer? You want detailed funding requests. Specifically, how much do you need? And the answer is not as much as I can get. It needs to be a real figure. Why do you need this money? And how is this money going to be used? When you look at marketing and sales, what is your strategy? How are you getting out into the public to let them know that you have this product or service that is available to them? Who are your customers? Where are they located? How do you get your product or service to your customer? Do you take it to them? Do they come to you? And your financial projections are looking at your financial statement. Okay, so we know what the financial statements are: the balance sheet, the profit and loss statement, or an income statement. The profit and loss and income statement is the same, and your cash flow. Okay, and if you don't have those, we're looking at what are you looking at your business in the future? That's your projection. What are you looking at for the coming year, the coming 12 months? What are you looking at for the next 3 to 5 years from a monetary standpoint? So in loan repayment, lenders want to be assured that you're going to pay them back. They only have one thing to sell, which is money, and they would like to make sure that they get that money back, plus whatever interest is attached to that. So how can you convince a lender that you can pay it back? Well, one of the things that you can look at is, do you have any collateral that says, if something were to go wrong, I've got this to back up those payments, whether it's real estate, equipment, inventory, whatever. And also to look at your cash flow. How strong is your cash flow? Are you constantly feeding that funnel so that as money goes out, money is constantly coming in? And the lender wants to make sure that that money that is coming in, and you can still pay your bills, that you can also pay the lender back. Spend time researching lenders. Spend time finding out who's out there, what they're offering, are they real, and figuring out what you can and cannot do. So, oops, went to the wrong page, sorry. So you want to look at a traditional bank, okay? That's the one that will get where you'll get the lump sum. It's usually a lower interest rate, and it has restrictions. An online lender, you can get a faster approval, but it's going to be more flexible, but it's also going to have higher interest rates. Credit union, people join credit unions because credit unions treat their members very well, and that may be a good place to look at your membership in your credit union. Then a micro lender, of course, is it's going to be a smaller loan. It's going to be more lenient terms. So what if you have a problem? What if you don't have the highest credit score? What if you have little or no business history? Your solution is, can you get a co-signer with a higher credit score so that the bank is feeling secure that there's somebody out there who will help you through that process? Or do you have assets that you can use as collateral that will, again, help the banker feel more secure that they're going to get their money back? So remember that qualifying for a small business loan requires careful preparation and understanding of the requirements and expectations of lenders. You are asking someone for their money. You need to convince them that you are someone they actually want to give their money to. So thank you very much for joining us about loans. Where is the money and what do you need to do in order to get your hands on it? Make sure that you go to extension.unr.edu/BusDev. This is where you will find all kinds of training that is specifically for you and for your business. Thanks for joining us.